gotten a lot of good news coming out of both the federal government and the Federal Reserve with respect to additional stimulus and liquidity measures that they have put in place to help us manage through this economic downturn that we're going through right now. But the market is looking for more positive news on the health front, whether it's with respect to therapeutics, a vaccine, or some of these stay-at-home orders being lifted so that the American economy can be gradually lifted again to the point where consumers can go out, start spending, and help our economy grow over time.
Right, and it's all related, Kirk. You know, the better we feel about even treatments, the more likely people are to try to take safe reopening measures. How do you sort of take that back to the stock market's valuation today, the rally we've had off the lows, and whether that's justified?
Well, I think it's very interesting that many companies are suspending earnings guidance. I think the big question will be, what will the 12 months normalized earnings look like? Obviously, everyone is hanging on the virus news, but the big question is, when does this end, and when does the economy normalize? Right now, I think the equity markets have gotten a bit ahead of themselves. They're certainly richly valued, but I think a lot of that is a result of the Fed put, and the Fed, drew the line in the sand, and it said it's going to support large credits, and I think the equity market has responded in kind.
Yeah, Kevin, let's go back to your thoughts as well about the market. Like you said, obviously we need better news on coronavirus treatments and vaccines and testing and so forth. What do you do with stocks in the meantime?
I think the main focus now should be on quality. As history has shown us during economic downturns, quality companies tend to outperform low-quality companies. What that means to investors on the equity side is that they should be looking at companies with strong balance sheets, low levels of debt, experienced management teams, history of earnings growth across multiple cycles. And even on the fixed income side, Kelly, we believe investors should be looking at and considering investment-grade fixed income securities, whether they be for the government, corporates, or even municipal bonds. Focus on quality during these periods of economic stress.
You're not worried about munis and the fact that McConnell would even bring up support for state bankruptcies?
I think munis were relatively strong coming into this crisis. Certainly on the investment grade side, we did see some support for municipalities. In the CARES Act, we saw the Federal Reserve providing some additional liquidity to munis as well, and we do believe there may be a potential fifth round of stimulus, if you will, that will also provide some additional support to municipalities. But again, it's a focus on quality for municipals as well.
Kirk, your advice as we go.
Well, I think there's increased demand for cloud computing services, paper and medical. Clearly, the need for communication infrastructure upgrades and cloud computing. So I think you want to look in those areas. But I agree with your other guest comments. I mean, you want to focus on the quality names here that are going to survive. Similarly, in the fixed income area, a lot of opportunity in investment-grade bonds, fallen angels that are still good credits but are under pressure. But again, there's a line in the sand here, and the big companies are going to do well, whether it's in fixed income, equity, or I would even argue in energy, and they're going to survive. And the companies that are levered more than 6 times or the independent producers are going to have a tough time.